Hey guys, it's Dustin again. I'm back. Want to follow up with a another pair that I'm looking at to trade next week. The pound CAD. It has a similar effect going on as it did with the pound Aussie. Um, Currently, like I mentioned, I'm an Ichimoku trader, so I have currently displayed here just the price on the monthly time frame for the pound CAD and the Kijin, sorry, the Chiku span, which is draws 26 periods back. The current price 26 periods back, and it shows its disposition in comparison to 26 periods ago, or in this case, 26 months ago, um, about 2 years back. So just roughly about 2 years back. So it's showing that the price is significantly higher than it was 2 years back. But anyways, currently, like now, the way I use it when I'm doing my analysis is I use the current peaks and highs. So right now, if you look at the Chico span, it has a high and a low here, um, which measures literally the range of the month. It's easier to see based on the little peaks and valleys. I could just pinpoint it instead of just for me personally, it's easier to see too. But right now, since the beginning of the last month of the year, we entered into a consolidation or distribution. You have the markup here. We exited a accumulation phase last year around, or I'm sorry, 2 years ago in 2011 into 2012 and at the beginning of 2013, and we broke 2013 around summertime. Out of that, had a markup for the latter part of the year, and now we've entered possibly either into just a short correction where it could possibly correct it and continue up, or we've actually entered into a distribution where we can see possibly another markdown at some time. Anyways, this year we're currently in a distribution consolidation, so I kind of try to pin, mark the high and low of the year to kind of get an idea of our range. This range is currently showing about 367 or so pips for the year. Not really a lot in comparison to this markup, which was like 3,000 pips from last year. But anyway, so we're in a consolidation right now for the year. Going down to the weekly time frame, looking for some potential patterns, wedges, traps that we can find where we can kind of see where market wants to fight against or be stubborn against. And so here we have a from July of 2013 all the way up to what is this May 25th of this year. And here we also have a uh, top of our wedge. Looks like we're in a position where market has kind of tested those levels and still wasn't significant enough to break through them. Also tested here a couple of times, maybe two or three times, and was not able to fall. So it's following in this wedge, and we'll see how it breaks out. Currently, we're in a movement up. We have a kind of similar of a double top here. We could form a triple top. I never try to figure out what kind of predict the market, but kind of just follow what it does once it does what it does, if that makes sense. So, moving down to the daily time frame, this is where I introduce my wonderful, wonderful Ichimoku system, the Kumo clouds, to kind of show me the intermediate time of the support and resistance. And here we go. So, as I mentioned before, we have exited that markup phase from the end of last year, and now we are in, since December, a distribution where we could be possibly getting all of the late bloomers out who want to continue to buy this market, kind of getting their stops out and moving into a position where markdown, where price is kind of overvalued. So we see that the price has, you see a little bit clearer that price has respected these wedge that we have here. But basically on the Kumo cloud, you can see that it has a hard time kind of depicting a decision of if it's going to be bearish or bullish. You have a short span here of bearish clouds, then bullish clouds, then bearish clouds, and it seems here that it continued for a little long. But here's the cool thing: it actually went lower this time. price has actually made new lows, and that's 26 periods in the future. So currently, this is the current future. It's showing bearish, but you can see how it's closing up on Seco span A and B. So what we're seeing here is a potential of it starting to turn bearish. We have a larger bearish cloud than we did the bullish after the large significant markup. So if you look at it from a, stepping back, you can see a little curve shape here where the Kumo is actually showing maybe a heavier resistance. The skinnier the cloud is, the faster the move it's shown over the period of time, and the least significance the resistance and support. Larger, wider support clouds equal more support, more turbulence. And you can see how here as the price accelerated, the Kumo also is tightened up and accelerated. So what we're looking here is a curve where we could possibly be now pushing down towards a shorter side. I trade the actual breakouts on the 4-hour. So here I'm looking. Here we had a actual significant push out where it was a buy signal, and I can show you just briefly why it's a buy signal. Looking at the Kijun-sen, the Kijun-sen is below the price of the current price. So that's a bullish signal showing that over the last 26 periods that it has broken above the price. In addition, we have a bullish Kumo continuation, hasn't twisted like it does here. It attempted to twist, but now it's still in a bullish position. And in addition to that, you can see how it's pretty much trending upwards on the shorter intermediate time frame. So significantly, what we can do is two plays here. We can wait for this to get heavy, breaks down, and take the longer trade over to kind of catch the sell-off of this very large markup from last year. We can wait for it to kind of break down on the 4-hour, or what we can do is, since it's actually trending upwards in this wedge for the year, we can actually take the opportunity to kind of ride it upwards next, ride it up to the next level of resistance here, and that would represent maybe about 120 pips on the upside, and something way more significant on the downside, 160 out downwards to 280 pips. So I'm actually going to try to capitalize on the uptrend move for a short profit of maybe between 60 to 80 pips upwards to 100 at the max. The reason I can kind of do that right here now, waiting next week, you can see how it burst out. It broke the last previous high, but it consolidated because the Friday we kind of squared our books and market closed. So I'm looking for an opportunity to get in and maybe ride it up a little higher. It has not shown anything trying to cover all this, so we'll see. It depends on how the price opens, but that's kind of me covering the pound CAD, hunting this and kind of seeing where it does. Thanks for checking this out, and I hope to see you in the next video.